very warm welcome to you as you join us on today's episode of Tax Matters. My name is Olumuyiwa Matuluku. How's your week been and how's business going? Brand new week, brand new episode of Tax Matters. Taxation remains a topical issue today as always, but even more so now that the country finds itself in dire straits. Yes, Benjamin Franklin said a few centuries ago that in this world only two things are certain: debt and taxes. Debt and taxes. But it remains a paradox, however, that it is the living that pay taxes. So how do we get people to voluntarily pay taxes? How do we get people to willingly part with their hard-earned income to pay taxes for the common good? Dr. Mark Abani was until recently a member of the Federal Inland Revenue Service Board and for many years worked at the UK's Her Majesty's Revenue and Customs. He presented a paper on building stakeholder support for tax transparency and accountability at the 18th Annual Tax Conference, which was held in May in Abuja. Dr. Abani's paper is what we want to share with you on today's episode of Tax Matters.
I presume that everybody in this room is a taxpayer. You've also heard, both from the chairman of this session and from the other people, that we are talking about putting your hands in your pockets and the reasons why we don't often want to put our hands in our pockets. Let me say, first of all, this is not a Nigerian problem. It's a worldwide problem. During the course of this presentation, I'm going to cover the stakeholders' roles. So who are the stakeholders? Stakeholders include you and me, community leaders, groups, all the sort of other organizations, including the government, who will be impacted by any program you're doing or who can influence the outcome. They can be internal. When you're talking of internal, you're talking of the government and the revenue authorities, or they can be external. They can be Lagos Chamber of Commerce, they can be you and I, they can be various pressure groups. And when we do this thing, we often say government should or somebody should, but we've got loads and loads of documents that already bring all of this together. One primary document is the National Tax Policy. And the National Tax Policy defines stakeholders in the Nigerian tax environment. It says stakeholders are those persons or entities who contribute to and derive benefit from the Nigerian tax system. Very simple. So we already have a policy in place that defines all of us and the roles that we're going to play. And the key stakeholders are the three arms of government, the tax authorities themselves, be that federal, state, or very importantly, local government. We have no organized local government taxation system to speak of in this country, but we have all of the paraphernalia and all of the laws in place. These are the guys who jump out and ask you for a radio license. These are guys who jump out and ask you for your bicycle license. But they also don't know that the Joint Tax Board has issued time and again edicts that say if you pay your radio license in Abuja, you don't have to pay it in Ogun when you're driving through Ogun. And by the way, most of the revenue, there's no tipper. I challenge you in this country, there's no tipper that move without paying at least 500 to 1,000 naira to somebody. I emphasize to somebody, not to the government, not in tax. Other stakeholders are taxpayers, individual and corporate, and of course, professional bodies like the CITN itself, the tax professionals, and the consultants. In many of our developing countries, there is very little public information or debate about taxation, even at election time. Wealthy and influential people evade tax, and public attitudes are just not clear. Everybody has a theory of what they would like to do to improve tax, but nobody wants to spend 1 minute of time actually researching what exists on the ground. Sometimes when I'm teaching tax inspectors, and I say, give me an idea of something that would give us a lot of tax now. They all come up with, hey, if we could tax property, we will make money, we have to make a law. And I say, what about capital gains tax? 10% of the net value or the gross of what you have bought and sold is taxable. If we collected capital gains tax in the FCT alone, we would be talking of billions and billions, if not low trillions of naira. My colleague has alluded to it. By the time you add in Lagos and a few of the major ones, the laws exist. But I can guarantee you that even if you talk to an average person, they don't know anything about capital gains tax. They don't know anything about property tax. And these are also emotive taxes. Property taxes have brought down or nearly brought down governments in other countries when it is not properly applied, because it's easy to tax the more visible ones. Also, we talk about widening the tax base. Are you going to come and tax me in my father's house in the village in Afipo? Have you got an enumeration for it? Every time I write down my address, I find it slightly different because it's really not been completely clear. And I'm sure many of us end up with our PMB rather than house number 42. So the majority of houses are still not there. But for taxation to be equal, it's going to go across the places. So even if you're paying 1,000 naira a year for your own property tax in your house in the village, while the guy in Abuja is paying a larger amount, you're not going to find that process is. Remember that from there, if you start getting used to paying it there, as you get enough money to build in your capital, you will already have a habit that you have to start paying it. So engagement and taxpayer support starts by actually talking to people and taking them forward. A growing body of research shows that taxation matters for governance. It's only now that we're beginning to ask, where is that money? Because the money is no longer there. If governments do not depend on taxpayers for revenue, they have little need to be accountable or responsive to people. In fact, even now, when you talk to some states, they really do not want to implement full IGR processes because it means the people will say, "Oh, God, wait till you carry our money, do." Something I often say to people is, I belong to an age grade in my village. They know they chop village money. If you put together money for a village project, nobody steals that money. Is that not true? Is that not true? But once we do it for government, the same people will be the same people who will take it and disappear. We have to start driving that governance. And part of that governance, why we ask those questions in the village, is because I put my hand in my pocket and I brought out that money. So I expect to know when the committee is going to buy Fanta for themselves, as well as when they are buying the rods. That's what is engagement. That's what is support. That's how you start to build it. If taxpayers see governments wasting their money, or if they believe that others are unfairly avoiding tax, then they will be reluctant to pay. And this, again, is something that's an international phenomenon. If you want to ensure compliance, you've actually got to make sure that you publicize the compliance that is happening.
Dr. Abani also had some perspectives on tax amnesty.
I hear lots about tax amnesties. They're very good ideas, but they have limited windows and limited methods of application. I was part of the UK government when we did an amnesty for people who were holding bank accounts offshore. We don't forgive the back taxes you owe. We forgive the penalties if you come and say, "Oh God, me, I did guilty." Oh. We come to an arrangement that will not kill you as to how you can pay the arrears, while we now know about you going forward. The minute you do an outright amnesty, has been shown in various countries, including in Australia, what will happen is everybody will sit down and wait for the next time another amnesty comes around. Because as I don't do it once, I must do them again. In the meantime, most large multinational companies, both in Nigeria and outside, do not pay their tax on time because the amount of interest you charge for late payment is less than the amount they borrow that same money from the bank. Therefore, they use the government as a bank. They are ready to pay, but they don't actually pay because it helps with their cash flow. How many people have paid VAT? Have you looked at your receipts how recently? How many of you have paid VAT in this country? Do you think any of those guys have remitted that VAT to FIRS? It's part of their working capital. So unless the authorities are actually built to collect these bright ideas of third-party tax and actually do something about it, you'll find that without certain safeguards, outright amnesty will actually backfire.
Do you provide goods and services? Then you must answer these important questions. Are you registered for VAT? Do you charge VAT on the goods and services you provide? Do you keep records of all your transactions? Do you file VAT returns? Do you remit VAT collected to government coffers? If your answer to any of these questions is no, then you are breaking the law. The law demands total compliance. Therefore, you must register for VAT. You must charge VAT on goods and services. You must file VAT returns. And you must remit all VAT collected on behalf of government within 21 days to the bank nearest to you. To do otherwise is a crime punishable everywhere in the world. VAT is prescribed by the law. Do the right thing. Collect and pay VAT. This message is from the FIRS. It pays to pay your tax.
Welcome back. The program is still Tax Matters, and what we're about today on this episode of the program is how to engender voluntary tax compliance in the system. And Dr. Mark Abani is our guide. What is the role of the media in galvanizing stakeholders towards supporting the tax drive?
The Panama Papers seem to confirm the evidence from elsewhere that the world's corrupt elites are gaming the international financial system to launder and protect their stolen wealth. Much of that stolen wealth is taxpayers' money. It's your money, it's my money. It's not a Nigerian-only problem. If you look at the Panama Papers, there are lots and lots and lots of world leaders. If you read the editorial of The Guardian yesterday in the UK, which followed up Cameron's discussion about Nigeria and its corruption, what they said was it was very good that a son of a man who kept almost all his money in Panama to avoid tax is now talking about corruption of other countries. Every time you point one finger out, 3 to 4 are pointing back at you. I am sure that FIRS has got at least 4 or 5 officers who are busy right now combing social media, combing those records, so that there's already an Excel sheet of all those of us, including some who may be sitting in this room, who have got Panama accounts for future cross-referencing. If now for my local language, we go say, ho-ho. What's the role of the media in building stakeholder engagement? I use the word stakeholder engagement because it's more than support. It actually is when somebody's engaged with you, that's when they start to work with you. So these are poor headlines. Market women are forced to pay tax for governor's perfume. When you see these kind of headlines, it means that even when you are on your way to the bank to go and pay your tax, you divert to Okrika Market and buy some perfume for yourself instead of for the governor's wife. So these headlines, whether we like it or not, have a very negative but reinforcing impact on taxpayers' attitudes, their support, and their engagement. We also have good headlines. In the state of Osun, the butcher's levy commenced on the 1st of April. And the decision, I took this straight out from the newspaper, the decision to introduce the levy was reached after an interactive session between the governor and the Butcher Association in the state. This is an example of where you are introducing a tax, you're introducing a levy, but you're talking to the people so that they're coming to you. It probably came out at something like 5,000 per head, which one civil servant somewhere would sit down and say, yeah, that's their kind of money, and it probably ended up at 100 naira per head. But you have started the process. I also know around harmonization in Osun State as well that they've started to talk to, for instance, the hotel industry. There was something like 70 different ministries, or everybody trying to tax 10,000 for this inspection, 10,000 for 10,000 for that. The only people who will pay you, the question I asked, how many people pay you now? No single database. Therefore, how do you think you're going to get it times 70? Don't you think it's better to have a more reasonable figure and get the association to agree with you so that you can start to do it? That's taxpayer engagement in making sure, because as they're giving you that money, they're now going to say, our association gave, as hotel owners, we gave the government from our association 300 million last year. What came back for us? That's how you start to drive the transparency and accountability. We often talk about, let's go and tax the informal regime. There is actually a presumptive tax regime approved by all the states and the federal government in Nigeria under the Joint Tax Board, which governs how you can collect tax based on people who don't keep records. And I gave an example recently somewhere where if you just had 300,000 of group 14 of the group of people, the taxes range from 2,500 naira per year to up to 100,000. But if you took that 80-90% of your taxpayers were in the 2,500 naira, with that sector alone, you could raise 5 billion naira just from them. And more importantly, you have brought them into the net. You have brought them into the net. Then they can start to talk about what they're going to pay. But these are the keke and peppered riders. These are the taxi drivers. These are the artisans. You go with large sums of money, they will never talk to you. You go with their groups. You go and start talking. You bring them in. Once you've got them in, you have name and address. You then start to link services to those sorts of things. I've been to some states where they tell me that before you can register your child for primary school, that you must show tax clearance certificate. I say, how many people do you have in your taxpayer database? 250,000. Out of how many million in your state? How many children do you have in your primary? We're giving free food to 1.9 million. So only 250,000 people gave birth to 1.9 million children, and all of them are in the same place. You're obviously not implementing in real life. All you need is for your headmasters to give you a list of all the tax clearance certificates that they saw. It's not rocket science.
The Federal Inland Revenue Service FIRS calls on all corporate organizations operating in Nigeria to register for the purpose of payment of taxes and obtain a tax identification number TIN. All registered companies must obtain a tax identification number immediately from the nearest FIRS office. You can also collect and return tax registration forms from the Federal Inland Revenue Service Engagement and Enlightenment Tax Teams (FEET) on compliance checks exercise in your area. A company which is yet to commence business after at least 6 months of incorporation must pay a pre-operational levy of 20,000 naira in the first year and 25,000 naira for subsequent years to obtain its tax clearance certificate (TCC). Note that filing and payment of VAT and withholding tax returns must be done on or before the 21st day of every month. Register for VAT. File all tax returns as and at when due. Be a responsible corporate citizen of Nigeria. It pays to pay your tax. This message is from the Federal Inland Revenue Service.
Now, part of the big elephant in the room always is corruption and evasion. And those are what drive poor performance. Because if I see other people not paying, me too, I will not pay. You need to actually drive the compliance, and people need to know that people are paying for it, and there are visible deterrents. This is the reason why, though the Lagos Chamber of Commerce may not like the high-profile cases that are being taken there, for every big case you take there, 10 other small cases say, if they can take this man to court, make I go talk my own. That's part of the whole process of how you do it. The question is whether they've picked the right cases and whether they've done the right things before it gets there. And we need to be fair, because small and medium enterprises in the formal sector also struggle to compete. First of all, the larger firms push them out, and then the informal sector now also starts to push them out because they're able to undercut them, because they're not adding withholding tax, they're not adding VAT. So when you go to buy, you'll avoid them and go and buy somebody who is selling cheaper because of the fact that they're avoiding those taxes.
Dr. Abani runs up this way.
So simple things that we can do include objective assessments. When you send an assessment to somebody that is on the moon, he's already lost trust and faith in what you're doing. This is because he's not done his own part, he hasn't done his self-assessment. So when you make an assessment, it needs to be reasonable and together. You could introduce the taxpayer advocate. There's one in the US. In the UK, there was the adjudicator's office where I worked as a manager for some time, where you actually look and support the taxpayer when they have a genuine complaint against the way in which they are being treated. Because very often, tax inspectors' power comes, it's everywhere in the world. You suddenly think you're a lord and a god. And sometimes you need somebody else to pull you and say, you didn't read the book properly. You didn't actually read what you're supposed to do. Come and do this one. Because not everybody can afford to take you to court where the courts will stand up on their own parts. So I recommend that we embrace the national tax policy approach to taxpayer engagement, use the media to promote positive stories of taxpayer engagement and highlight the link between the tax paid and the service delivery. Remember that when we talk about taxes, we use it as a generic term. We're talking about IGR. Some of the things you collect are fines because somebody has infracted something. It's not just a tax. Some other ones are levies, which are one-off or for a particular reason. and other ones are service charges. But we very often lump all of them together. For a service charge, you should be getting something in return. For instance, if I pay as a hotelier, if I pay the fire brigade 10,000 naira to inspect my premises, I need to have a certificate. I need to know that my place is safe for members of the public to stay. So we need to make those differentiations. We need to be innovative in their government strategies, and we need to show leadership in tax compliance. The president and other leaders need to pay tax and make their declarations public.
That was Dr. Mark Abani, until very recently a member of the board of the Federal Inland Revenue Service in Nigeria, and of course for very many years a top official of Her Majesty's Revenue and Customs in the UK. Among other things, Dr. Mark Abani spoke about the role of the media in engendering voluntary tax compliance, in galvanizing the various stakeholders for an efficient tax system. Much later, at another forum, this matter came up. Mr. Simon Kolawole spoke at the 8th Wole Soyinka Center Media Lecture Series on the role of investigative journalism in driving accountability and good tax administration.
There is a lot of responsibility that has been placed on the media in the last 1.5 hours. But I see the responsibility in a different way. Our responsibility is both to the government and to the society. For the Nigerian media, for me, the kind of agenda we should be pushing is what I call the sociology of taxation. We hear so much about the technicalities. We hear so much about taxation being an economic tool, a revenue tool. But taxation is actually a relationship between the state and the society. It is a relationship between the state and the society. Now, how is this relationship being built? Is it a consensual relationship? Is it cohesive? In advanced countries where this thing is working very well, it's negotiated. There is buy-in. There is stakeholder engagement. In most advanced countries today, what they pursue is voluntary compliance. The way the tax system runs in Nigeria is cohesive. Now, if you cannot get the stakeholder buy-in, if you cannot encourage people to voluntarily comply, the tension will always be there. People will always think that you are robbing them. And that's why I use the word consensual, because it's nothing but rape, the way it is being carried out currently. If you think I'm lying, just go outside there and see Okada riders. Councils hire thugs to collect their own levies and all that from Okada riders. How can you have a good relationship in such a situation? So, for me, the media, we have to educate the government on that. There's a difference between consensual and coercive taxation. What we've carried on from colonial era, because when your grandfather and your father who are old enough to tell you the stories of how they were blocking the road, asking for your tax. Some people will run away from their village because they don't want to pay tax. It's always been war. If the economy is productive, more people are making money, the tax revenue will increase. It's just for you to put certain things in place. Like Mrs. Balogun spoke about the technology, how technology has helped. So we have a duty of educating the government that taxation is a tool of relationship, not just a tool of revenue. Not just because oil price has gone down, and so we want to make money from elsewhere. In Benue State, they say they are imposing something on generators, that they want to go and repair the ozone layer because the generator is emitting substances destroying the ozone layer. I heard that in Lagos now, if you have a borehole, they are planning to charge you. And you expect me to be encouraging Nigerians as, oh, the government loves you, be patriotic. Government has not provided me with water. I paid 200 and something thousand to sink a borehole, and you want to tax me? And you say, as a journalist, I should be encouraging people, oh, pay. You know, these people are nice guys. Pay your tax.
Like Dr. Abani, Mr. Kolawole spoke about the nexus, the connection between taxation and good governance, between taxation and accountability and transparency.
Why most governments in developing countries don't want to tax is that there is a way taxation, when it hits, forces you to start asking for accountability in government. And that's too much for them. If I can be raking in $1 billion from just one sector, and then I want to collect 100 million from this one, they're asking me how am I spending the money. I'd rather not tax them. And that has been our lot for ages. Government never took taxation seriously. Because when taxation hurts, there's call for accountability. There's call for transparency.
What is there to add except to say, pay your taxes for a better Nigeria? It is your badge of honor. It is your badge of good citizenship. We thank you for watching. See you next week.